Welcome to Trading Nation. I'm Sara Eisen. Stocks in rally mode today. The Dow crossing back over 25K, but maybe a little more than a dead cat bounce. So says our next guest, Lakshman Achuthan, the co-founder of the Economic Cycle Research Institute, sees evidence of an economic slowdown. Welcome, Lakshman.
Thank you.
So you actually brought a chart here of income and spending growth. Why is this important?
Well, those income and spending are two of the key coincident indicators of the economy right outside your window, along with production and employment. But income and spending, they speak very closely to the consumer, which is about 70% of the U.S. economy. And when you look at the chart, what you see is that for several months now, actually since late last year, consumer spending growth has been easing, as has personal income growth. And those are year-over-year numbers. And that points to a fresh softening of a big part of the U.S. economy, notwithstanding all of the excitement about the market going up. And ultimately, there has to be some connection, I would say, between Wall Street and Main Street. I know they can diverge at times, but in theory, these things are related. We're talking about growth in the economy, growth in profits beyond a tax cut. And I think that these are important things to take into the consideration. So
how do you square that with some of the better indicators that we've gotten lately? I'm thinking about retail sales recently, for instance.
Well, I mean, retail sales are in those numbers. Retail sales are a little narrower, and I expect that the growth rates are going to continue to trend down. I know we have earnings seasons, kind of coming up with some of the retailers now, and I think when you step back from any gyrations, that you're going to see a sign of continued easing. It's right there in the chart. And there's another thing in the chart which is very important, which is that spending is outpacing income's growth. So growth in spending, even though it's slowing, is much faster than income's growth. So there's a gap. That has to be financed. That's borrowing. And that puts a lot of pressure on consumers, especially if interest rates are starting to rise or rising further. They've already risen. With the expectation that the economy is actually doing better, which I don't think it is. The Fed is projecting more rate hikes. The market is thinking that the Fed is going to raise rates. That's all putting pressure on the consumer, which is already slowing down, which is 70% of the economy. So there's some tension here between what's going on with the economy outside your window and what's going on with expectations on Wall Street.
So do you see equity investors, bond investors, and currency investors all missing this?
To a degree, yeah. I mean, well, they're missing it in the sense that the policy position right now is one of continued tightening as the economy normalizes to a higher trend growth rate. That's not happening. I think that's mistaking last year's cyclical upturn for something more than that, when really it was a cyclical upturn which is now ebbing back. It's decelerating. And I think as that becomes apparent, the markets will have to kind of take that into account. It's going to be hard to beat some of the profits growth that we've seen. Certainly some of that's maybe a one-off with tax cuts. But as the overall economic environment eases, when you look globally, you see it happening more starkly already. And the U.S. is not escaping that.
So with rates rising, are you telling people to go to cash?
Well, I think it depends who you are, right? If you're an aggressive speculator and the technicals are moving you one way and you're going on momentum, you can stick around. I mean, I think it's a little bit, I think what you have to understand is that from an economic cycle risk point of view, the risk is rising or has already risen. There is a stealth slowdown already happening. The charts that I was showing there, that's not a forecast. That's already happened. The forward-looking indicators anticipated that, and they haven't turned up yet. So we have further slowing to go.
Lakshman, thank you very much. Always good to talk to you. Lakshman Achuthan of the Economic Cycle Research Institute. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.